All right, welcome to the market recap for Tuesday, July 1st, first day of the new quarter, and unfortunately a pretty rough day in the market. In this video, we'll be going over the indexes, taking a look at the liquid leaders, a few ETFs. We saw some major rotation in the market today, so we'll spend a little bit more time with the ETFs and um, the general watch list, but then end the video with some long setups, some short setups going into tomorrow. Just a reminder, the market is closed on Friday for the 4th of July and has a half day on Thursday. So tomorrow is our last full trading day of the week. So starting things off, QQQ, weakest day in a while, gap down, tested the 5-day EMA, bounced a little bit, close, still above the 5-day moving average. So don't want people to overreact to this distribution day, but slight distribution day, down 0.9%, still above the 5-day. S&P 500, a little bit stronger, and that signals the rotation that we saw in the market. Just an inside day, closed basically flat, still above the 5-day, and some air to the 5-day moving average. Still acting great. IWO, gap down, tested the 5-day moving average, and then rallied to close just above the support gap and still above the 5-day. So closed similar to the S&P 500, basically flat. That's not bad. ARKK gap down, closed into the support gap and bounced at the 10-day moving average. As long as it's still above the 20-day moving average, a breakout retest of the previous highs here would still be healthy overall. Just means that we might be in a choppier environment over the next couple weeks as we pull back here. And then Bitcoin closed under the 20-day moving average, but still could be putting in a potential higher low here for a really nice setup. I still think Bitcoin is a group and crypto is a theme to focus on. If this market pullback is held by the 10-day or even by the 20-day in a couple week kind of fluctuation. We'll go to the leaders because that's really where we saw the damage today. Now, I did switch things up. Palantir, I kicked out of the leaders list. It closed under the gap up from Monday after a really ugly close on Friday on high volume. We recaptured the 20-day yesterday, but then had lower highs, lower lows, closed under Friday's low by a couple cents. And under the 20-day moving average, there's just a couple stronger stocks out there right now. So took this off the list and replaced it by Royal Caribbean, which made another new all-time high today. Continues to trade above the 5-day moving average, closing well. Just a monster stock and a really good one to go through and study. Every time it pulls back, gets supported at the 20-day, supported at the 20-day, 20-day, and then has ripped. So RCL is the new stock in the leaders list. Robinhood, pretty volatile day. Started the day up, I think like 1%, rallied about 1.5% higher than that. Eventually did succumb to the pressure in the market as we sold back down through the HVC, but still kind of like a volatile doji candle, but still above the 5-day moving average. Had the highest volume in over a year after yesterday's highest volume, so not quite sure what to make of that. But want to see this kind of tighten up or even pull back to the 10-day moving average gap zone at 84. That would be a spot that I'd be really interested in getting involved. Zscaler down 2% today, uppercut and failed of the gap down zone, so we changed that to a resistance gap and then sold off into the support gap, bounced there, and closed right at the 10-day. So we're seeing volatility increase, but not a lot of price action downward, only down 2%. NVIDIA down 2.97%, closed under the 5-day moving average after gapping down. This I'm watching for the gap zone here, the 20-day moving average, and kind of a breakout retest as a potential entry point for NVIDIA. CrowdStrike made new highs earlier in the session, then sold off into the 20-day moving average and support gap, bounced at that level. Potential buy point would be that 485 area, right at the 20-day moving average, and then you could use the low of the pullback as a stop right around 480. CRWV, another gap down, so second subtle gap down since we topped at 184. Starting to show some weakness and kind of a signal that momentum has been drying up in the market lately. Roblox, first really bad down, not even a really bad down day, but first notable down day in the entire upcycle. First time we've lost the 10-day moving average on a closing basis since reclaiming it on, when was this? On April 11th. So monster stock. We got that 20-day moving average in gap zone. That'll be a really important tell to see if that gets soaked up or if we have more of a pullback and more basing to do. GEV, very wild action, but end of the day only down 4.4% at that 10-day moving average. Kind of undercut this 20-day, came into the support gap, didn't quite get to that level. Otherwise, that would have been a nice low risk entry point to play a intraday bounce back, if not anything longer. But small gap down to deal with now if we're going to continue to trend. And then Spotify, a little bit more weakness, down 5.8% into that 20-day moving average. We've seen that hold over a couple of different times, so we'll see if this time is any different or if we get a gap up and then reignite this uptrend. So on a day that all the leaders were down and QQQ is down, when you take a look at the industry ETFs, it wasn't as bad as the rest of the market. And actually, one thing that I want to go to before that is taking a look at the dashboard here, the heat map for the S&P 500. You can see a lot of the kind of mega cap names, NVIDIA, Palantir, SMCI, Tesla, AMD, AVGO. Those were down a bunch, but the rest of the market was actually up. We saw the equal weight ETFs do extremely well today, and that's just showing you that money hasn't been leaving the market today. It's just been rotating from the high liquid growth names into the rest of the market. And why I think that happened was we had NAAIM exposure, so active investors exposure level, only at 80%. Typically, that is not high enough to kind of signal a market top. Usually you get into that 95% or above range. And when looking back through the numbers in 2020, a market that I'm continuing to compare this rally to, we didn't really top out until it hit 105 in September. So because active investors were still so far not overly invested, only 80% invested. When we did have a distribution day in the liquid growth leaders, there was still plenty of money to buy up some pullbacks in other stocks, and we saw that rotation throughout the market. So first, I wanted to go to ITB. This is the home builders ETF, up 4.3%, had been lagging recently, but so far has turned it around, had one, two gap ups since the bottom. And with today's volume, it kind of feels like this is the signal that interest rates might be coming down. At least someone big thinks interest rates are going to be coming down. Because you also saw some other groups like TAN, the solar ETF. I really think this group has bottomed, and I've said that in the past. And every time I say that in the past, it has signaled that the market has topped, and then we roll over. But one thing that's different this time is we sold off on news that the EV credits and solar credits are going to be cut in the big bill. And instead of breaking to the downside after that gap down, we actually put in a higher low to the 50-day moving average, rallied up to the 200-day, had a couple tight days, and then pushed through today on volume. And if you know about stage analysis and uptrends and downtrends, stocks top on their best news. They tend to bottom on their worst news. And we had horrible news and we didn't break lower. So that's a good sign for the group. And a couple of stocks within that group I'll be kind of focused on for the second half of 2025. XRT, the retail ETF, strong move, opened on the low after a gap down into that 20-day EMA and support gap, and then rallied big time up 2.9%, closing above all the key moving averages. And now we're starting to see those moving averages flip to an uptrend as well. XLF is another group that I wanted to talk about. This is the financials ETF, made new all-time highs today. We opened on the low, closed near the high of the day, saw a lot of great rotation, and growth stocks within that group still held up relatively well today. So this is a group that if some of the other kind of growth stocks that have been leading need some time to pull back, I think this is going to be the next group to get some rotation. KWEB is another group that I wanted to talk about. This is the Chinese Internet ETF, continues to tighten up here. If you look back, this is a 2-year base where it sold off, hasn't gone anywhere for 2 years, but now we're seeing volatility really, really tighten up. What we want to see is some news, a news catalyst, or some reason for this to break out on massive volume to really trigger this uptrend. And we don't need to kind of get in and anticipate that breakout because we have such a large base here. Once the breakout does start to occur, we've got plenty of room to the upside. So that's a group that I'm going to be focused on along with solar and financials in that second half of the year. A couple other groups that I wanted to cover: CIBR, a little bit of weakness, but we undercut and held the 10-day moving average and support gap. ITA gap down, undercut the support gap, but held the 10-day. And then NLR, the nuclear ETF or uranium ETF, a little bit of weakness with the gap down. We broke through the 5, closed under the 10, but we have this 20-day moving average and support gap area as a potential undercut and rally zone. So kind of a weird day in the market. We had a lot of rotation, a lot of main growth leaders got hit. AEVA is one that comes to mind. Had the highest volume ever on the way down here. Ended the day down 24%. And this was one of those kind of high flying momentum names that had been so strong this entire uptrend. So the fact that we got the highest volume on the way down today is a little bit of a warning sign for growth stocks, but remember, if we look back at 2020, we'll go to the Qs here and zoom back into that area. Once we retook highs, we had that accelerated move followed by a big distribution day down 5%, probably on some COVID news. And then just a lot of volatility over the next 2 weeks before we got a higher low test of the 20-day moving average and then started to rally again. And this comparison to 2020 has been working super well. So in my mind, that's what I'm going to be focused on, kind of some volatility over the next 2 weeks, and then look for some really high quality spots to get invested in the liquid leaders. So hopefully have a nice run up into September or whenever we get NAAIM exposure levels over that 95, over that 100% level, where we can then start looking at a really accelerated move into kind of a blow off top and then some major basing. All right, let's take a look at some long setups going into tomorrow. I got, what was it, 11 of them. Circle, this was on the watch list coming into today, but gap down, undercut the lows of the pullback, and then had a nice move back up into that area. We got the 5-day moving average as the pivot right at like 193.30, just through today's highs, a potential entry point, or if we gap up an opening range break versus the daily low to kind of reignite this uptrend. And if that doesn't work, so if, say, we break to the downside and follow through, that's going to be another signal that, hey, this is a kind of a risk off time in the market, time to either play stuff to the short side or just play more undercut and rallies versus pivot breakouts. ELF, this has been on the watch list for a while. We're just going to stay patient, wait for it, the 20-day moving average support gap area to be tested. Undercut of that is buyable versus the low of the pullback at 115. KWEB, I talked about this earlier as one of the groups that I wanted to focus on. A few of the stocks within that group, TME, I have a position in this from, what was that, Friday through the high. Kind of tested my cost basis, but another pullback to that 10-day moving average as maybe the market pulls back, that would be a nice spot to get involved. Another spot is if the market really starts to accelerate to the downside, the 20-day moving average and gap zone at $18 is another spot to watch. TIGR, another China name with a big base, looking for a high volume move through kind of this pivot at $10 to ignite that. The other one was FUTU, acting a little bit better, right near highs, and another stock that has a massive multi-year base starting to get tight on the right side of that base. So looking for a high volume breakout of that area. Hut, this was on the watch list, and I actually took this trade through yesterday's high. And then, like I said, we were in a kind of later stage spot in the market rally. So I said if the stock didn't work immediately, I would kick it back to the curb. And that's what I did. I took it for like a 1% loss, but it still held up well compared to some other names. I still think Bitcoin could be putting in that higher low, getting ready for a breakout. So just through yesterday's high, 1880 is a potential entry, and then the stop would be today's low on that one. AS, we've been covering this for a while, looking for an undercut of the HVC, that 20-day moving average, and pull back low here at 37 is potential entry, and then the stop would be the low from the major part of the pullback here at like 35.70. NVIDIA, we talked about earlier, looking for that gap zone, allowing that 20-day moving average to come up right around 148 as a potential entry on the undercut and rally. SOFI, in that kind of financial group that I think is going to start really starting to accelerate in the second half of the year. We already saw Robinhood kind of kick things off. Now we're looking for the secondary names within that group. SoFi could be that. Looking for a pullback, undercut of the 5-day support gap. That would be okay, but the real spot I'm watching is this gap zone and that 10-day moving average. If we can chop for a couple days and then undercut that, that would be a nice breakout retest to get in. Roblox, the 20-day moving average and gap zone is the spot to watch for me. LEU, a little bit of weakness today with the rest of energy names, looking for an undercut and reclaim of the 20-day moving average and support gap as a potential entry. Stop would be 1 or 2%. I don't think I would give it to the low of this shakeout. I would just give it 1 or 2% there. SMR, another name that I actually tried today. There was a support gap through this area, and I'll kind of walk through this. It'll only take a second. So I bought this as we undercut and reclaimed the support gap low. It was also right at that 20-day moving average. Thought it was working really well. Immediately got a response to that level. That's what you want to see. But then unfortunately, we came back into it, tested my cost basis. My stop was the low of the day after we reclaimed the support gap low. We put in a lower high, lower low, lower high, and then eventually stopped me out there. And then did actually kind of rally later in the day, but overall, that's how I wanted to trade the undercut and rally. Super tight risk. Again, it was the first day that we were seeing any distribution, so I was willing to try it because it has the ability to work really well when it gets supported, but wasn't in the cards today. So we close out this support gap. Now looking for an undercut of the 34.47 area, kind of that pullback low, or if we get a opening range break gap up tomorrow, then we could use today's low as the stop. Just because we did close under the 20-day, I've seen this multiple times. A close under the 20-day followed by an unfilled gap up can reignite the uptrend. So we'll keep it on our radar for that. But I would rather the undercut of the support gap. OUST, looking for this area, the gap zone, 20-day moving average, and round number $20. That's also a breakout retest. So an undercut of that area and reclaim would be the entry. Stop would be the low of the day, wherever that manages to be. On the short setups, we have HIMS. Today we uppercut and failed yesterday's high by just a few cents. That was kind of the A-plus spot to get involved. I did take an intraday trade on that, but closed it at the end of the day. Now just looking for a lower high rally in the $50 area, the 50-day moving average, and the resistance gap low as a potential short spot versus that 20-day moving average or high of day. That would be a spot where I could size in a little bit smaller, but then give it actually some room to maybe roll over here if the market's weak. CRWV, I think this has been kind of the signal for momentum this entire run in the market. We started with the gap down on the 23rd of June, traded sideways, fell through the 5 and 10-day moving averages, started trading sideways, and then another gap down today. This would just be a short through today's low and then try to cover kind of in the support gap at 140 area. Or if you think the market's going to continue to pull back even more, then you just ride it and then you have your stop at today's high. DXYZ, this was on the short watch list. Unfortunately, we gapped down so heavily that I didn't take this on the short side. But what I would be looking for here is kind of a market rally, and then this to rally, uppercut and fail the gap down zone, the 20-day moving average and the 10-day moving average, or sorry, the 200-day moving average and the 10-day moving average as a potential entry versus the 20-day and 50-day as the stop right around $40. You can see this is a name that had that monster run in December of last year, and since then hasn't really been doing anything. MMYT, this has been on the short watch list for a long time. We've stayed patient with it. It's starting to roll over here. You got the 200-day moving average now in a downtrend. We put in another lower high. We're at one, two, three, four, five, six gap down zones off the high, and now we're below all the key moving averages. So today was really the trigger through yesterday's low. Um, any kind of like morning rally, then VWAP loss, kind of around that 20-day moving average could be your stop placement, or just an accelerated move down through today's low. Stop at today's high would be a little bit wider, about 4% of a stop there. NAKA, this one was on the watch list yesterday as the short. It didn't follow through the downside. Still nice and tight here. Breaking through 13 as the short versus today's high. And then this could easily break to the upside as well. And you could play that as momentum burst. But I'm going to be focused on this on the short side. But because it's set up for both, it's a name that if it does start working to the upside and you're short, you got to get out right away because you don't want to be involved trying to fight that trend. BFLY, this has been on the short watch list for a while. One of those speculative names that just never quite got back running. Uh, Bumped into the 200-day moving average multiple times as that was ascending. Now we got the 200-day in a downtrend. We're right below $2. Just looking for a break under today's low to really accelerate this move to the downside. If the market bounces, we could get a rally to like the 20-day, and then that would be a nice spot for a lower high kind of potential. But for me, just looking for a breakthrough today's low. RCAT, another speculative name that we've started to see some more weakness earlier on compared to the rest of the market. Big gap down on the 17th, bear flagging in the 20-day moving average and starting to break to the downside today with a gap down and weak close. Just looking through today's low as the entry, stop would be the 20-day and above today's gap. And finally, PDYN, similar type name, rallied up into a resistance gap, faded to the 20-day EMA, bounced there, put in a lower high, another gap down on Friday, followed through with a wedge drop today, down 7% into a support gap. A mini rally into the 20-day could be like an intraday short spot or just through the support gap below, and then see how it responds to the 50-day moving average. But my guess is if we are going through some kind of momentum dry up the next week or two, a lot of these speculative names that have shown weakness compared to the other speculative names have the best chance to really accelerate to the downside. Last thing I wanted to point out of my general watch list, which is 117 names right now, 17 of them were up today, while 100 were down. So, first stress test that we've had in the market in a while. My thumbnail yesterday of stocks only go up. That was a joking thumbnail. I hope you understood that by my tone yesterday. But that's kind of the way that the market has felt lately. When you get to that point, you get a little extended. It's time for a stress test. But again, with NAAIM exposure only at 80%, it makes sense that we saw rotation in the market instead of just all out market pullback. So my guess is we'll see just more chop and volatility increase over the next 2 weeks until hopefully we can get a nice uptrend going again, until exposure is really overstated. That's going to be the market recap for July 1st. Hopefully my voice wasn't too bad coming off a little cold here, but feeling a lot better. Hope you guys have a great rest of your week, and I'll see you guys in tomorrow's video.